So welcome everybody to today's training series. As we've talked about before, we do record these. So if you see the material and want to share it with one of your staff members or teammates or whatever, please do and let them do it or see the material. Many of you know about Essential Markets, or you may know me from my days as a nationwide agent or whatever. A few years ago, Nationwide came to us and asked us if we would help them build out a platform to enable P&C agencies of all types to solve their clients' needs through life insurance. So we put this platform together. It's basically old school week with one new player, Justin, but it's old home week from those of you at our old Nationwiders or whatever. But it's me, Brad, Justin, who's our newbie, but not really a newbie. Got a lot of experience with Farmers and American National, helping P&C agency sell life insurance, and then David Harnsworth, who you guys all know. So the previous videos that we've put up, you're welcome to do those. I think there's a QR code on here. You can scan that if you want to with your phone right now. If you're looking for some training for your team or for yourself, you can go back and watch these deals on our YouTube site. So thinking about today's topic, the question comes in. Can somebody mute that? I keep hearing feedback. I don't know if everybody's muted or not. The question comes up is, what is term insurance, right? So let's just talk about this. I can read this slide, but as a group, let's just kind of talk about what we think term insurance is.
Insurance for a term of years or temporary insurance.
Okay, temporary. So similar to your car insurance, you buy it for a period of time, and if you don't have a claim during that period of time, there's no benefit. Okay, anybody else?
It's like renting an apartment, similar to that.
Okay, give me some more on that.
Okay. So when renting an apartment, you sign a lease for a certain amount of months. So in this case, for term insurance, we have, set number of years that you can essentially, quote unquote, rent that term policy. And at that point, you can decide if you want to renew it or convert it over to a whole life plan, something like that.
Okay, so maybe your thought process is if you're comparing it to homeownership, when you buy a home, you build equity in the home. When you rent, you don't build any equity. So with a term policy, you typically don't build any equity. With a permanent policy, you would build some equity in that policy. That's an interesting way to look at it. Anybody else have a unique way that they pitch it to a client like that?
Yeah, when they buy a new car, we try to add it pretty much loan protection, and we just write them either a 5 or a 10-year term, especially if they're young. And we kind of package that with the auto. Interesting.
Okay, so one of the bullet points here is, depending on the insurance company, it may be possible to turn the term life into a whole life insurance policy. It may also not just be the company; it could be the contract you buy from the company. Most people that have experience with an insurance carrier that's got a convertible product think all term policies are convertible. Actually, a lot of them in the marketplace are not convertible. And so you need to know that when you're going in, especially if you're shopping, maybe you're spreadsheeting your client and looking at different carriers to do it, and you have a cheaper price or a lower cost one, you might look at the terms and conditions of that contract and see if there's any conversion privileges in it, because usually there's not. Remember, all risk is priced the same. It's actual science. So if someone's got a cheaper price, and typically they're either have changed the terms and conditions of the contract, or they're buying market share, right? They've got a situation where they're doing it, but the portfolios in most cases typically all perform about the same. So any other thoughts on this? Yes, go ahead, Brad.
Real quick, too, on that conversion, many people don't realize, even though a carrier may offer into a convertible permanent product, some carriers actually create separate permanent products that aren't their street product that have worse pricing, because the actuarial thought is, if you're converting, you're probably sick or not as healthy and not able to get fully underwritten at that moment. So many convertible permanent products are not the street competitive regular price product.
Yeah.
And to add to what Brad said, not all term policies are convertible to what the company has offered in their portfolio of either universal life or whole life. they limit the conversion to one type of policy that's a little bit, like Brad said, higher priced. Or A.L. Williams years ago, they had no term conversion privileges on their policies, and if they did, they converted it to another term policy. So
Right.
it's, you know, you have to check out to see what your options are, because not all term insurance is the same.
Yeah, and I think what you'll see in practice is that a lot of times consumers will think that a policy is convertible because they had a discussion with their agent in the beginning, and maybe the contract they bought and ended up not being convertible, or the conversion privilege is a shorter period of time than the full length of the term. So a lot of carriers, you know, you think you have a 10-year contract or 10-year term, so I've got 10 years to convert it. It might be 8 years, it could be 7 years, it could be 5 years. There's some language in there. Just need to know those things. Devin and I are working on a case right now on some farmers policies that we're trying to convert to get converted because the customer has health issues, and we're having a heck of a time getting it done. So just lots of issues there in the marketplace with different carriers. So just be aware of that. So the next, yes, sir.
I'm sorry.
Yeah.
On your explain a little bit about what you said. One of the companies, if you're going to convert it the first 7 years, you can convert it to preferred risk if the person's preferred. But the last 3, if it's a 10-year, you can only go standard on tobacco.
Yeah.
So
and you're exactly right, Sam. So a lot of times there's gotchas in those contracts, right? So just be aware of that, because you might be selling one carrier, and I'll use Nationwide, and, you know, Brad can give you the details of that. Nationwide, for example, will go on their current product set. They'll go to 10 years. You know, the full period is convertible to any other permanent product that Nationwide offers, and those are their street products, not any special products. But you could take that assumption and take it to other insurance carriers. And our counsel to you here today is to not do that. So think about it when you're looking at somebody else's policy to help them that somebody else wrote, and or maybe just something that you're writing with Prudential or some other carrier, and you find yourself in trouble because you thought it had the same conversion privileges, because they're all different, is what we're trying to tell you. All right, good stuff there. So kind of think of the insurance timeline and why people, do this from a need perspective or whatever. And this chart's a great way to kind of look at what people, their needs, their wants, and their working years. And all of you that had some time in this business kind of know what happens, right? When you're young, on the left side of this chart, your needs are very, very high, and you're trying to get to that thing way out at the end on the one side, right? And there's a fine balance of how do I manage this income replacement, education for my dependents, I'll pay off my debts, make sure my family can stay in their house, all those different things. But this chart should give you a good idea of what people are thinking about when they're looking at this solution to solve their problem. So, how do you currently position your term insurance? So I'll open this up again to the discussion, right? I put a list of things on the slides here, right? Cost, account rounding, protect cover. Do you want fries with that? Emergency coverage, term versus perm, buy term and invest difference, estate planning or tax purposes, cover college tuition and expenses, foundational coverage, etc. So let's open it up and talk a little bit about what it is how you guys position this.
Primarily income replacement.
So Devin, you typically do it for income replacement.
Yeah, I mean, I pepper in, the other things on that list as well. But, let's face it, a young professional who's making, $300, $350, $4,000 a year, that's their main need. Yeah, they've got a mortgage, they've got, education costs to plan for, but their main need is income replacement.
So interesting, because if you replace the income, all the other problems go away, right? Because it's as if they're still alive. That's a cool idea. Anybody else?
Yeah, Warren, I was going to say, what I like about the Nationwide one is the conversion, because the conversion privilege is pretty good with the Nationwide products. You're locking in your insurability, with that conversion privilege. Really for a young family, you can't beat a term policy as far as coverage for price. We all know it's not ideal compared to permanent, but it gets them in the game and some coverage, at least temporarily.
Yeah, that's a great one, John. Justin, you should add it to this list. Lock in your insurability. That's a great idea. Yeah, great idea. Anybody else
I mean,
have a thought?
for years, selling to younger people that don't really get the equity piece completely. And it's changing a little bit. Most younger people want to own a house. So if they're not in that stage yet, maybe they're getting ready to first, you can explain the difference between term and permanent and, as to where you first lived. Not everybody can go out of high school and buy a house. And if they buy a house, is it cheaper than renting an apartment? No. Well, why would you do it? Equity, got some cash, you own it. Those are all things that you want to have a permanent policy. So you may not be able to do it today, but you want to get a policy that guarantees that you can get it when you can afford it. So that's how I used to do it. And the other thing is, years ago, I mean, it was a long time, everybody knows, but if I had sold term insurance, I didn't believe in it. Nationwide had a terrible policy back in the day. If I had believed a little bit in term and ran that term route younger in my career, I'd be a rich man because of the conversion privileges. Because nowadays, all 40-year-olds are on some types of meds. Back when I started, you could hardly find anybody on meds in their 50s. So if you sell a term conversion product like a Nationwide or somebody that has good term conversion privileges, you can convert a piece of that as they grow. So you sell them $500,000, and when they can afford it, you convert 250,000 of it. It guarantees you future sales, so you make commission over and over again on it.
Nice. And I think the basic premise of this whole slide here is over in the bubble of the guy sitting at the table trying to do it. And it should be the back of your mind is the most important thing you do as an agent for that client is to cover the need, right? To be there for them in case they have an untimely death and the money comes, right? It doesn't matter whether it's a permanent product or a term product when the death benefit's paid, right? So your first thought should be, I need to protect the need. And then if I can throw in some ancillary benefits, I would do that. And so, going back to a product that's convertible or non-convertible, if a client's got a financial issue and you can cover the need, then and maybe the only product you can sell them is one that doesn't have a term conversion, but it's $20 a month cheaper or $50 a month cheaper. I'm making this up as we're talking here. Maybe that's the best solution to cover the need, right? It's not a bad product. It just doesn't have the conversion privileges in it. Does that make sense to you all? So don't think I'm picking on those carriers that don't have conversions. They're doing that to price it so people that can afford the product if they need to get it. Make sense to everyone?
Warren, in the 40-some years I've been doing this, I've never had a client give me a check back when I delivered a death benefit.
Yeah, that's a great point, Ron.
And you're the only one coming with a check. Everybody else has a bill at a funeral.
That's exactly right. Everybody else, the undertaker wants the money. The guy digging the hole in the ground to bury you wants money. Everybody wants money. The
Even the minister wants money.
Minister wants money. Yeah, great point. So yeah, go ahead.
Our financial planning business, when we work with people that are retiring, one thing about term insurance and life insurance, as an idea, when somebody has to take their RMD, required minimum distribution, it's taxable.
Right.
And sometimes they don't know where to put it. So if they have a term policy, you could also convert that, use the RMD to buy a life insurance policy, convert it, put the premium in there, and all the money when they die is going tax-free to their heirs rather than putting it in a retirement account. So they'll have at least some tax-free money to offset the income they're going to have from the IRA or their 401k.
Great strategy. Yeah, great strategy. If they don't need the RMD, you could leverage it into a life insurance policy. Yeah, use part of it. Yeah, great one. So the last point on this slide was about foundational coverage. And this is just a financial pyramid that we've used in our firm for years with clients to try to get them to understand what's going on, right? So if you look down at the bottom, the foundation, your home insurance, your auto insurance, flood, disability, basic life insurance, long-term care, and your will, those are all in your insurance needs at the bottom, right? Too many times do I see agents will sell someone who needs the foundational coverage. They'll take the opportunity to sell that client a permanent product in that when it's foundational coverage, and then 2 years later, a year later, the client dumps the insurance product because they can't afford it. Right. So and you need to have that conversation because that that really goes up in that second to top tier. That life insurance policy that's permanent is really an investment in their long-term savings or things of that nature. And so what you might want to think about is if you can solve both needs, if the client has the wherewithal to do that, then I'd probably sell them a permanent product that solved their foundational need and was an investment later in life. But many times people get this idea that term insurance is bad. A lot of people will tell you that's bad or whatever, usually buying permanent or whatever. And my argument is no, term insurance has a great place in this basic foundation of your financial pyramid, right? But how many customers do you guys have that have a rent house? They bought their first house, they rented it, they buy their second house and rent their first house out, and they don't have an emergency fund or 6 months of savings. They're not really putting any money in their 401k plan. They don't have investment stocks or bonds, and they don't have the foundation of their pyramid built with disability insurance and all those things, right? Because basically that rent house is up there in the very peak of this. It's actually speculation. It's a speculative investment, right? Because if you lost the tenant, could they keep the house? So we don't think of it that we don't think of it that way. We just think it's a rent house.
Whoops, sorry.
Go ahead, Sam. I'm sorry.
No, I'm sorry to interrupt you.
It's okay. Go ahead.
Term insurance for Nationwide has a chronic illness rider built in it. So for the long-term care needs, now there's not too many companies that have Midland National is one that has it. Not too many companies that sell term insurance have a long-term care and or a chronic illness rider free in it. So that is a great planning tool for Nationwide's term policies because you can take care of somebody that has an LTC concern and it's included in term insurance. So now that gives you a better reason to sell term rather than trying to dump it on a whole life insurance policy with a rider.
I'd be careful saying that the living benefits of the three living benefits Nationwide's offers are going to solve the full long-term care situation.
Right.
But it does give them some protection that they don't have by having that endorsement on the policy. It's a great point. Yep. All right.
It's a chronic illness rather than a typical long-term care rider that we're used to, or a long-term care policy that we're used to. But it pays for a basic need for free if a guy has a chronic illness that causes him not to do 2 out of 6 activities of daily living.
Yeah, and so that was an interesting comment there. He said it was free. Do you guys think that rider is free? And I'm making that point because you can find a cheaper term insurance policy on the marketplace that when you spreadsheet, you're going to say, okay, Nationwide's $4 more a month, $4 more a month. I'm going to go with the cheaper term insurance product. My guess is the cheaper term insurance product doesn't have that living benefit, those 3 living benefits attached to the contract. That's why I said all risk is priced the same. So at some point you have to look back and make sure that what are you getting with the benefit. That if the client just needs death benefit, then sell them the policy that doesn't have those coverages. But if the client needs the long-term care or the chronic illness and accelerated death benefit, things of that nature, then sell them a product that has those features built into it. The question I'll ask the group is, how are decisions made? Are they made subconsciously or consciously?
Subconscious.
Subconsciously.
Interesting. Subconsciously. When you walk into a place and you sense fear, right? You sense something's wrong. Is that your conscious mind talking to you or your subconscious mind talking to you?
Subconscious.
Yeah. So you kind of look at it, right? 95% of purchasing decisions are made subconsciously. People make major decisions based on emotions and their subconscious feelings, right? And so many times as practitioners in our space, we get so excited about the features and the benefits of these products that you really have to go back to this idea around what it does versus what it is, right? We love the what it is because we're excited about the features. Sam just talked to us about, in the Nationwide term product, right? That those features are there. We get so boiled up on the conscious side of it that you forget to go back to that. That's why the way I sell this life insurance in general is I just ask people what their plan is. And then, if you died in a car wreck on your way home from work tonight, what's your plan? And then I just listen to them talk. And then I try to call BS when I hear something that doesn't make sense to me. Like I'll say, who's going to get your kids? And they'll say, well, my sister. And then I'll say something like, well, does she know? Is there a written document that enables the courts to give your kids to her? Is your sister broke, or can she afford to pay for her 2 kids to go to T-ball and your 2 kids to be in T-ball also? Are you going to create a financial burden by having this going on? Those are all emotional decisions. I'm trying to play on the emotions of it to get our subconscious involved in the decision making process versus the logical side of why you should buy life insurance. Hope that helps everybody, right? So this just goes more into what it is versus what it does, right? So if you look at the conversations dominated by features and benefits engage the conscious mind, which is what it is. And then if you really why you want to do something, right, go over to the right side and you've got to connect them with what it does, right? Because the conscious side fails to engage or relate to the emotional element of making a decision. Does that make sense to everybody on the call?
Yeah. And may I kind of use the analogy of the impulse items at checkout. And usually I do this on a yellow pad. I turn around and I ask them what kind of items do they see on when they're checking out that kind of like draw their attention. And they'll give me, I said, I only need like 4 or 5 or whatever, and they'll give me 3 or 4. And then on the other side, I turn around and I kind of draw little pictures of, like, of course, stick figures with everybody happy and smiley faces. And then I kind of use the analogy with the term insurance as the impulse item. And then they got 2 options. They either got the smiley face or the sad face at the end if something happened. So which impulse item would you like? And usually it's the smiley face. So
yeah,
they can't say no to that at that point.
I like that. Does anybody here, will they admit or to the idea that they have presented life insurance from a conscious side, that you've led with a ledger, or you've led with the features and benefits? Go ahead, John.
Yeah, and I was just thinking about your comment. That's when I don't make a sale, it's from the conscious side. It's, it makes complete sense. You talk about all the features and benefits, but it's not resonating with the client. There's no emotion. And that's a big takeaway for me.
Oh, great. Glad
I think
got that through.
The biggest thing, Warren, that we've seen is people in our agency in the property casualty business that they know the clients the best. They talk to them the most, and they have the best chance. They have the emotional sale right there in their hand, and they turn it to, something like a material thing and ask the wrong question. And that's why they say they can't sell life insurance, is because they make it a material thing. They just like asking the word, hey, do you have life insurance? Do you need life insurance? 90%, 99 is going to say no, whether they need it or not.
Yeah. And Ron, I think the important thing here for everybody here, because everyone on this call is for the most part in the P&C distribution business also. If you ask anybody if they want to buy renter's insurance, the answer is no. Right? So, but if you ask it in a different way, if you ask them, hey, if your apartment burned down tonight and all your stuff were gone, would you want me to replace it? The answer to that question is yes. They'll say yes every time, right? And so stop asking a conscious question about all the things you sell. So I'll use rental reimbursement. Do you want to buy rental reimbursement for your auto policy? The answer is no. Hey, if your car were in an accident and you needed us to provide you an enterprise vehicle or something similar, would you want us to pay for that? That's not hard. What I just did there, y'all, it's not hard. It's a very simple approach for you to move from what it does to what it is. So just take the life insurance piece, everything you're doing, and talk about what it does for the family versus what it is. And your sales will immediately go up because you'll apply to the emotional side of the brain versus the logical side of the brain.
Warren,
Warren.
Yes.
Stuff like that. I package it and then show it as a benefit. And
Yeah.
after I've already presented, I don't give it an option really. You know, after I presented it, I just ask them, here's the benefits and here's the price, and this is all included. Is there anything else, or is there anything that you think you don't need or would want? And 9 out of 10 times, as I'm shaking my head, no or yes, they're just following me. So,
Yeah.
and that's the end of that. So, I mean, it's like from an objection point, I, for me anyway, if I ask them, do they want it? I'm giving them an option to say no. If I tell them it's included, this is the package I put together for you, and it includes this, and that. At that point, it's like, wow, that's a lot. I'm getting a lot for my value for my money, and let's do it. And that's how I kind of do it. So,
Okay. Anybody else have a thought?
Warren,
Yeah, go ahead,
just
Sam.
a quick
Ron,
comment
go
on
ahead.
something I did the other day, working with one of my people. They're fairly new at the life insurance piece, and even on just property casualty. And I thought about all the new things that are around that weren't around when I started selling life insurance. So the biggest one that you can ask somebody now that's of any younger age, have you ever donated to a GoFundMe account to bury somebody's family member?
Mhm.
Everybody has. And I
Yep.
just say, is that what you want?
Yeah, exactly right.
I mean, and it's,
Ron, that's a great
red
question.
cross.
Yeah, it's a great,
I think
great
one of
point.
the things, when I was talking to a client the other day, most people already have life insurance because they work somewhere. And they automatically depend upon that life insurance to be part of their financial plan until the day they die. But what they don't realize is if they're going to retire someday, that group life insurance is gone. So I think for me, when I was talking to, he's a professional guy. He's got a couple $1 million of life insurance, and we're debating going back, converting term, and when he's going to retire and all that kind of stuff. The most important thing I can do as an advisor to him is listen to what he has to say about, this is what I know I have. And then comment on, well, did you understand that this is going to happen to you? And do you know this is going to happen to this life insurance? Oh, okay. Well, gee, I didn't think about that. I said, well, then are you going to need anything by the time you go to this age? And what's that going to look like for you with your program now? Did you ever think of, you're sitting here, you have X amount of dollars in your 401k, you're putting money away, you got a joint savings account. Where can you put money that grows tax-free and you can take it out tax-free? You can't.
Yeah.
You can put money in there and you don't have a risk of problems. You don't have to have a penalty to take early withdrawal. So it's something that you might want to think about between now and the next 20 years of your life. So it's just listening to them and find out what they think and add your expertise to have a conversation with them.
Yeah,
Hey,
Justin,
Warren,
you have a
one-
question? Yeah.
Yeah, one thing I was going to point out is, and we kind of did this on purpose, but if you'll notice, the beginning of the presentation was basically just copy and pasting definitions of what insurance is from a contract standpoint, and we got very little no interaction. Once we started talking about conceptual stuff and what it does, look at the interaction that we get here. It's the same thing that your clients want when you're engaging them with conversations about their lives too.
Yeah, and I think it's important in because everybody, and I'm guilty, we're all guilty of this. When the sale gets going, we have a tendency to start going technical with the client. And my argument, and John just admitted it, that is to stay emotional. You have to answer the technical questions, but you got to keep relating it back to what it does versus what it is. And that'll help you close those sales that don't close now. Because you'll get into, you're going to retire and you're not going to have life insurance, and you're going into all these technical things versus, Sam just did a little bit of it. He said, what are you going to do? Are you going to have a need? And I can just tell you in my own life, I thought that my need for life insurance would go down as I aged. It's completely wrong. Every successful person I know is buying more life insurance the older they get. I mean, I heard of a sale last week for a family that was $3 million in premium. For and the man's in his 70s trying to buy more life insurance. So it just, this fallacy that as we age we're gonna need less is probably wrong, because most people that are successful and have the need to have life insurance end up becoming more and more successful, and then the need gets greater and greater as they get older, not less and less. So interesting stuff. I think that's a great point there, Justin. So, but going back to the what does term insurance do, right? And again, let's go back to this emotional side. These are just some words we put on the paper about what it does, right? Versus what it is, to give you ideas of ways to position it. Most of you can think of ways, if you just keep going back to what it does, what it does, what it does in your brain, use that in your sales pitch. That make sense to everyone? All right.
Yes, it does.
Awesome. And so what we want to do now is bring on Devin, and Devin's just going to kind of talk about how he's doing positioning term from a consultative approach and what it looks like, just to give you from a producer's perspective how he does this on a day in, day out process.
Thanks, Warren, Brad, Justin, for inviting me in. Some of you may know me, most of you probably don't. Just real quick bio. I've been in the business for 27 years almost. Worked that entire time period with Warren here. Spent the last 20 years, give or take, running sales producers, bringing them on, training them, teaching them, developing them, so on and so forth. And I don't know, 6-7 months ago, 8 months ago, I kind of changed my career focus to, although I'd been involved in life insurance, financial services for a long time, selling here and there, decided to devote, change my career, if you will, to this life insurance, financial services sales exclusively. So I'm getting to that point. So I wanted to kind of bring you guys in to kind of share with you what I've been doing over the last, I would say last year, give or take. I don't think either of this is revolutionary, but just a couple of tidbits that might be of use to you. My whether it's term, whether it's perm, whether it's sophisticated, whether it's simple, basic, my approach is always the same, right? Which is to make it as educational as I can, make it interactive. You'll hear me saying it, using some phrases and some words I use with my clients. But for starters here, most of my leads, I get some from repeat customers, but most of my leads are coming from PNC producers, right? These are guys that I'm sharing revenue with. They're sending me leads. We've tried to teach these guys how to sell life insurance for the last 20 years, and they don't want any part of it. So they're flipping their leads to me, and away we go. So by the time I get the lead from them, more times than not, the client has an idea of how much they want or what they think they want. If they don't, we'll kind of go through a basic needs analysis, but mostly they have an idea of what they think they want. And I'm sure you guys have gotten this call before from the guy or the gal that, I need $1 million of term insurance, right? Kind of a standard approach. I need $1 million, I need $2 million, whatever. So kind of talking through that, you'll see there my 1/2 2x to 1/3 3x rule. And everything you see here, I use this verbiage, this language with my client. So this is not something that I'm just kind of doing behind the scenes. I'm telling them up front what this is. And I kind of talk through them with it. And I say, you know what? So the 1/2 2x rule is what I used to call it up until about 2 years ago, which is all you guys, I'm sure, have been through this. Anything you spend money on of substance, of a trip, education, retirement savings, a home renovation project, whatever it is. Before you start, you have an idea of what you think you're going to have in mind when you're done. And when you're finished, it's about half of what you thought you were going to have. You have an idea of what that cost is going to be, what that budget is going to be. When you're done, it's probably about 2 times what you thought it was going to be. That was until about 24 months ago, right? That's accelerating today, right? It's not quite to 1/3, 3x, but it's getting there, right? People are now, I took a vacation this past summer and it was more than twice what I had budgeted. So I'm having this discussion with people, and it's not to try and convince them to buy more insurance, right? Anybody that knows me knows I don't care. I'm trying to help these guys every way I can, right? I don't care what they buy. If they whatever they have when they leave, they're better off than when they found me. So, but I think it's important for them to understand that, in 10 years, this death benefit is going to be, probably 75% of what it is today. So I'm having that discussion with them, and light bulbs are going off, right? People are saying, well, rather than $1 million, why don't you quote me $2 million or $3 million? Or rather than 2, quote me 5. I had a guy that had $3 million already. He called about his wife. I went through this discussion with him. He's an attorney, smart guy. He said, you know what? I just called about my wife, but I need you to quote me $8 million for myself. Okay. So this is part of the approach I'm taking to help people understand and really put them in a situation to understand what they might need, right? Because I think most people, when they say I need $1 million, they're thinking about today, right? If I die tomorrow, my wife needs $1 million. Well, in reality, that's probably not going to happen, right? So getting them to understand first that this is a benefit received by someone at some point in time, and to understand how it's really going to be received and what the value of it's going to be at the time is important. I think you've got to first establish what that is. So you'll see there, my average face is 2.7 million. And I don't know, Brad, what Nationwide's average, term face is, but that's my average face. And I would probably say before discussion starts, it's probably about half of that, a third of that.
And Devin, I think it's important that, I know $1 million is still a lot of money, but logically, if I talk to you guys about logic today, if you had $1 million and you wanted to conserve it and you invested it and made 5% rate of return without jeopardizing the $1 million, that's $50,000 a year that you're replacing that person's income. Right. So it just isn't very much money in today's world.
It's really not. And that's part of the acceleration, right, Warren? Even if you look back just 2 years ago, you would say, okay, yeah, maybe not. But now today, over the last 24 months of what we've seen from pricing acceleration, inflation, you look at it and you're like, holy cow, it's really not. It's still, we would all still take it, right? We're not going to turn it down. But it's not what it once was. So that's kind of my basis, my very basic approach, if you will. I'm not trying to go through. We talked just a moment ago about tactical versus emotional. I'm not trying to get the client involved in a lot of in the weeds, in a lot of details. I'm trying to keep it so they understand what I'm talking about. And when I use stories, we have a idea we've used forever, which is facts tell, stories sell, which is actually what that subconscious, people buy with their emotional side. Stories bring out the emotional side of people. So when you start telling stories about things they may have experienced, then they relate to this 1/2, 2x rule very easily. Okay. Third thing is, so once we decide the need, okay, we're going to apply for $3 million, $4 million, whatever that number is. I always, unless I know the person is not going to qualify, and I don't do this forcefully, right? I don't say, Nationwide's the one, right? I say we're likely going to, based on what you've told me, we'll likely apply with Nationwide Insurance, Nationwide Life Insurance Company, and here's why. Okay. Then I go into these 2 factors you see right here. Number 1 is the intelligent underwriting. Right now, Brad and I had some discussion about a year ago, and I'm like, my volume wasn't what it is today, but I'm like, Brad, I got nobody going through accelerated underwriting. Everybody I'm submitting through has to get an exam done. Okay. That's changed. I don't know what levers they pulled, what they've done internally, but I can tell you right now, my last 20 my last 26 cases, half of them have gone through without an exam required. And these are not preferred plus risks. These are not even preferred risks. Okay. We're getting some risk go through at standard non-tobacco, standard plus without an exam. Okay. To take it a step further, about a quarter, it's actually a little bit more than a quarter of my cases I've submitted have received an offer within 24 hours, some the same day as doing the online interview. Okay. So I'm sharing this with people. Why? Because people don't like to go through exams. People don't like to have a needle stuck in their arm. People don't like to pee in a cup and they're at their office and give it to somebody they don't know who it is, right? So I'm trying to take that away from them. Now I tell them it's 50-50, right? They might have to do it, okay? But we're gonna apply with Nationwide because good chance you might not have to, okay? And then the I don't know who that was earlier who was alluding to the living benefits. The second piece I talk about in this, differentiating Nationwide is living benefits. So I go through the living benefits. I send the actual brochure to the client right after or before, so they understand what it is. And again, it's not necessarily to try and have them, at some point in time need or use that or take away that benefit. It's a differentiator. Okay. And I'm telling them that I don't know, and I'll tell them exactly, I don't know who else has in this style. I can tell you who doesn't, but I know that right now, not a lot of people have, not a lot of carriers are offering all of these living benefits. I'll even go a step further and kind of give them a historical kind of, timeline, if you will, about term insurance, right? I'll tell them, 20 years ago, term insurance was term insurance, right? But as we know, carriers try and differentiate themselves from each other. Today, Nationwide's probably the leading large life insurance carrier in differentiating themselves from the competition in these ways. Okay. The other thing I'll insert in here is, which is a big piece of my process, which is I learned a long time ago that people hear what they see. Okay. So again, people hear what they see. If you have a conversation with somebody, just a dialogue over the phone, at an event somewhere, networking meeting, just talking with them, they're going to remember on average about a third of what you say. Okay. So whenever I can, I show everything I'm talking about to my prospects, to my clients. Okay. Whether that be the form with the living benefits. Just last Friday, had a situation. We had a call going on. A guy was kind of visual, like I am. Actually popped up my computer, started running illustrations on my computer so he could understand and kind of see. And when he did that, the light bulb just went off, right? So I always try and show people visually what I want them to understand. Okay, it seems to help quite a bit. I think you can go next slide there, Warren. Client process. So again, I just mentioned this. People hear what they see, right? To begin with, I have, unless it's in person, every application I take is via Zoom or via Teams. I share my screen and we will go through the application piece by piece so that the individual is seeing their application. It's an interactive function or feature that, keeps them engaged. Okay. Just asking questions over the phone and typing it in and writing it out doesn't go very well, in my opinion. So, and even when you meet somebody face to face and you're sitting next to them and writing the application out, they still can't see what you're writing, what it says, what have you. So just an idea, pop up the application on the screen. They can see it. It's pretty funny. A lot of times they'll be answering the question like as you get to it. So again, it keeps them engaged in that application process. The other piece I see that I do is, you'll see here my process, 8 steps. I've created, I don't know if it's 8 steps, 6 steps, whatever. 8 steps sounded good, so I made it 8 steps. And it basically takes them through, and again, this is specifically geared towards the nationwide underwriting process. It takes them through part A, which is the electronic application we do together, all the way through getting an official offer. Okay, and I send that to them as soon as we do the Teams meeting with the electronic application. I send that to them. I highlight in green, here's what we've done. I highlight in yellow, next steps. Okay, but it lays out for them the entire process of submitting an application for life insurance and what the underwriting entails. Right.
Yeah,
So
Devin, I think it's great because you're being transparent with them with the process because they don't know what's going to happen. My question to you is, when do you talk to them about the rating class? That and do you apply for the best rating class? Do you where in your process is that? Because this is kind of after they've said, okay, when I buy, where
yeah. So good question. It's probably up in 2 with the needs analysis. Before I even start to go back and quote anything, illustrate anything, good question, Warren. I didn't cover that. I do ask them, right? And again, I tell them up front, I'm not an underwriter. I don't know what rate you're going to receive. But can you tell me, current history, medical history, family history, the very basics, any medications you're taking.
I think it's critical for the group to understand that because the client thinks when you change the rate afterwards that you're baiting and switching them. So you have to tell them at some point in your process, you have to tell them how you qualify for the rate.
Yeah. So great point. My apologies for glossing over that, but again, so a few other things on that, Warren. Let me get to that. So when I have that conversation, and I do present before we actually go the application process, and I do present actual solutions, I will always provide 2 to 3 rate classes, right, and show them what that spread is, what it looks like, and again reemphasize the fact that we won't know until we get an offer, but based on what you've shared with me, unless you're something we don't know about, something you're not telling me, you should qualify for one of these 2 or 3 rates, right? Matter of fact, just had a case last week. We actually acted up yesterday, and the guy sent over to the agent that referred it to me, sent over the meds he's taking, his height, weight, different things, right? So kind of looked at it, asked about anything else you need to be aware of. Said no. I provided a rate for standard, plus, and standard. And I told the producer, I said, look, I don't see him getting a better rate than this. He said, that's fine. So the guy called me and said, hey, what's the difference? What is this? And I explained to him what it was. So yes, we are having that conversation. I'm not by any means just saying, okay, hey, here's a non-tobacco preferred plus rate, and away we go. So, but so that process, that 8-step process that we go through, at the very end, last thing is, receive a formal offer, or at least we hope we do. And what's interesting is when you get interactive in this fashion with them, and you keep them, you're being transparent. When you get that offer, and you finally tell them, hey, guess what? Congratulations. I always say congratulations. We've received an offer. To date, knock on wood, whatever the offer is, I have yet to have anybody say, I don't want it, doesn't sound good, argue with me, how come I didn't get this rate? None of that. Because, I think for one, they've gone through this process, and it's been educational. They feel they have value. They seem like they're getting value from it. And when we get that offer, it's just like, okay, great. What's next? Wrap it up, close it, right? And the last piece here is measure it. You know, again, I'm a big believer in, if you don't measure it, you can't control it. Measure everything. Okay. I mean, I measure every prospect every quote I get, what date I get it. I measure every date I follow up with the client. I measure every quote that I take to an application, every application I get an offer on, every offer I close. I'm measuring, you know, my top 10 at any given time. I'm measuring everything I can. Okay. I'm probably a little bit obsessed with that aspect of it. And you know, maybe it's beginner's luck, I don't know, but of the 30 cases I've got offers on in the last 8 months, I've placed 96 of them. So so that's kind of what you know, kind of my approach, what I'm doing.
Any questions for Devin?
Hey,
Who's
for the
interested?
group, I did. Go ahead, Sid.
Who wants his 8 steps?
I put it in the chat.
All right, great, awesome.
Yep.
I have a question.
Sure.
What happened if they go through the medical and it's significantly outside of the scope of what they're told you on the application?
Well, I mean, I haven't had any of that yet, Jamie, but I think because I'm trying to do pretty good due diligence up front. Historically, I can tell you in my previous, you know, before really having the volume I have, I would always solve that issue with if they, you know, if it was an affordability issue, then I would either adjust the term or just the face amount. Okay, to give them at least something. If it's a situation where, you know, hey, I can't afford this, well, I don't want them to walk away empty-handed, right?
Yep.
Yeah.
Want them to have something.
Jamie, I think another thing that we're doing, and we've always done this in our agency retail side, but from a wholesale side, if you've got somebody that you talk to initially and they've got some issues, you can reach out to Brad, and Brad will go to the chief medical officer at Nationwide in their team, and he'll tell you whether they're going to make an offer. So we're not even submitting them, and then we'll try to help you figure out which carrier might write that. So, you know, maybe the guy's got prostate cancer or something like that. We'll say, hey, XYZ, you know, we know XYZ writes prostate cancer, take it to Prudential. And I'm making it up as we're talking. I'm using, so don't think Prudential writes prostate cancer. I'm just telling you that if you present them that way, we'll try to get you done so that the client understands, hey, you got some issues. And you don't ever even present Nationwide. They don't get to decline on their MIB. You just say, you know, I'm thinking the best carrier for you is Prudential, you know, and based on that information.
Yep.
All right.
I think just another thing too on the Devins, when you give them a pricing, we're talking about rate classes. If they're younger, I generally always give them a standard rate class. Tell them there's 3 classes better. So if you're an overachiever, you might get a better rate. The reason I do it is on a younger person, if they get a 1 class, they can generally get 100,000 more for the same price. So when I come back, I just say, listen, you're so good, you qualified for 1.2 million. I never give up the premium I sold them on. So that's old school. We used to come back with 2 cases in the old days. Now you can do it this way because the underwriting is the same for those 2 cases.
That's funny you said that, Ron, because Brad, I think that you were on the copy. I just had the similar situation. You know, young guy, he didn't think he would qualify for what he did, and we were able to bump him up 250,000 on his face before issuance. So, yeah.
So these pieces here are available from Nationwide for you guys. They're great tools. It kind of covers the pieces that we're talking about here to make it work with you. So it gives you, so it's not just your process. You can say this is the process we're using with Nationwide Insurance or whatever, and you can get these with other carriers, as you probably know. All right. So this is kind of the intelligent underwriting stats for essential markets overall. Brad, I'll let you take this one because you know the details.
Just to reinforce with everybody, the intelligent underwriting program is very strong between 18 and 50. I would say 25 to 45 is their sweet spot. That's traditionally where programs like that are focused. Nationwide, I think, is ahead of the curve as it relates to going up to 5 million. Again, you saw Devin's average face amount. So when he's getting these decisions same day or in 24 hours, these aren't for 100,000, they're for several million of face. So it is working. We are seeing significant improvement. You can see the results down below. So 53%, almost 54 within 10 days or less. 71% have no fluids or medicals that have to get taken. Only 20% are having doctors' reports ordered. Placement ratio, when accelerated, when it gets through, is 86%. If you take away anything, I want to reinforce it, you take away anything from Devin's, the fact that he's placing 96% of underwriting decisions and he doesn't know these clients. These are getting flipped to him. They may get a warm referral, but these are people that he's being able to sell on his own through his process, and he's placing 96%. And then I thought the last one's interested too. So nearly 50% of the intelligent underwriting offers are preferred or preferred plus. So it's kind of working the way they want their model to work.
It's very interesting because when we were in negotiations with Nationwide to start the BGA, one of the sticking points with us was that we would be able to have a stick related to these kind of things because carriers will publicize their rates of issuance and things of that nature. And as a single producer, you're going, well, that's not the experience I'm having, right? I'm getting all my cases declined or whatever. So we basically told them we need the data so that we can hold you to the numbers you broadcast publicly. We're going to see whether that's actually works in our system. So these are the numbers for our system, not the numbers from Nationwide. These are the numbers that are you guys in general, you folks on this call, and the rest of the producers in the Nationwide essential market system are experiencing. So it's pretty good results.
Yep. Yeah, absolutely. So our Life University training is happening at the end of March. I think we actually have 2 spots available. Somebody had a schedule change. So if there's anybody out there that wants to send either a producer that's new to life insurance, or maybe they've kind of taken a break from it and want to get reacclimated, it'll actually be hosted at Nationwide's headquarters in Columbus. So it's a 3-day kind of boot camp style training that we're super excited to have. I would say also in the next 30 days, we should be announcing our awards and recognition program as well as the trip. We got some awesome locations that we're down to, kind of picking through what we want to have for a 2025 payoff.
And so if you have any questions that you need, remember this whole thing for us is about relationships, helping people, helping us help you get developed or develop your teams, and then supporting you so you can make money in the life insurance business. Brad and Justin are doing this. They don't work on anything else but essential markets. So you guys will know that this is their full-time gig, and they're building out a really, really great platform. So if you need help, there's their number. If you got an idea, there's a number. We've got some cool stuff coming from a large scale perspective with a product called Nationwide Essentials. We should have it out in the next 60 days. If you've got a large partner that you want to partner, you can partner with and use a 3-question application process and instant issue some life policies. We've got that platform built and just about ready to launch. So there'll be more to come on that thing. So if you have anything else you need from us, please let us know. We appreciate all your support, appreciate what you do for us in selling life insurance.
Hey, one last thing is annuities. So obviously it's a great time in the annuity market. Phones are ringing for annuities. There's old annuities that you have that don't have any surrender charges that are laying around that a client can get a much better vehicle now. So we have a full suite of annuity carriers that aren't just limited to Nationwide. So if you have questions about that, feel free to reach out about that as well.